The main US share index jumped 1.7% last night and the Nasdaq more than 2%, and there were solid gains around the world as the swift action by American authorities to guarantee bank deposits had the desired effect of calming frayed nerves. In Australia, the market closed almost 1% higher, with banks and financials leading the way. Now, the All Ordinaries Index is now returned to the level it got to on February the 20th, 2020, the pre-pandemic peak. So share market investors have been on a 3-year round trip to nowhere. The oil price continued to weaken because of concerns about the effect of America's banking problems on demand, and the Australian dollar continued to strengthen, with the US dollar falling as traders adjust their thinking about American rate hikes from here. That is, if there is one next week, it'll be 0.25%, not half, as they were expecting. The ABS released some data on employment in tourism today, which is just about back to where it was before the pandemic began. And in fact, Australian employment in general is among the strongest in the world, as this chart from Macquarie shows. And finally, this chart was published by real estate research outfit CoreLogic today, showing rolling 4-week house price changes in 5 capital cities. And on this viewing, it looks like the decline is over. And the reason is simply that listings are down 20%, so there's not enough stock. But CoreLogic says it's too early to say the bottom is behind us because we haven't yet seen the full impact of the rate hikes. And that's finance.